Hey everybody, and welcome to the channel for more amazing company and stock analysis. Just know that I am not a financial advisor and that this video is for entertainment purposes only. With that said, don't forget to like this video and subscribe for more fundamental and technical analysis on the most trending stocks. Now, let's get on with the video. Alright, so today's video we're going to be talking about the company Li Auto, and I want to begin this video with the fundamental analysis just like how I do in majority of my videos. Best way to do this, I'm going to look at this first quarter Q 2021 financial results, and I've done some annotations, and I really do feel worthy that it's worth sharing to y'all. So to begin with, the number of deliveries. If you're looking at this in the long-term, long run, 2020 Q1, they had about 2,900 deliveries, and now that number is multiplied by about 6 times as much in 2021 in the first quarter. However, it's very important to consider that in 2020 Q4, they delivered about 14,464 vehicles, and they dropped about 2,000 vehicles in Q1 of this year. Now, Li Auto, further down while I was reading this, I found that the decrease in revenue from vehicle sales, possibly because of the reduction in vehicles sold, was from the fourth quarter of 2020, was mainly attributable to the decrease in vehicle deliveries, obviously, which were affected by seasonal factors related to the Chinese New Year holiday, as well as the localized COVID-19 outbreaks in northern China in February 2021. So this is a seasonal thing to consider. So the drop here was kind of expected. It had a logical reasoning for the drop, and it wasn't at fault for the company, but rather environmental and communal and religious reasoning for it. So it really doesn't take a huge account. On this next point, as of March 31st, 2021, the company had 65 retail stores covering 49 cities and 135 servicing centers, and also had body and paint shops operating in 98 cities. Now, instead of just reading this to you, I thought, okay, why not do the research on my own and see how much they have right now? And that's exactly what I would like to show you with findings I found from autonewsgasgoo.com and MarketWatch. All right, so with this simple Google search, as of April 30th, 2021, the company had 73 retail stores covering 53 cities and 143 servicing centers, and Li Auto authorized body and paint shops operating in 105 cities, having every number increase in within a month by a lot. Not only that, by June 2021, which information I got from MarketWatch, I was able to find that about Li Auto Tech, MarketWatch being a very credible source, the company had 97 retail stores covering 64 cities and 167 servicing centers, and Li Auto authorized body and paint shops operating in 127 cities as of June 30th, 2021. And they released this in their Li Auto Inc. June 2021 delivery update. So back to this first quarter 2021 financial results, they used to have 65 retail stores covering 49 cities, 135 servicing centers, and operating in 98 cities. All the numbers increased, which is spectacular. And this information hasn't even been released out yet partly because they haven't released their second quarter financial. All right, so as y'all can see here, right, on their financial highlights for the first quarter of 2021, there's a ton of stuff that I highlighted in green for good and red for bad. And, the vehicle sales, as mentioned earlier, that had to do with the communal religious thing, the Chinese New Year, the outbreak, and that kind of affected the vehicle sales, vehicle margin, total revenues, gross profit, gross margin. It was all kind of like, it made sense. And from those alone, it looks like the company is very much growing in the long term, partly because, well, look, the company has been improving. First quarter used to have $3.46 billion RMB. If you look at an increase through now, over 311%. Pretty good. But even though, there was some decrease. But again, there was reasoning, there was a why. It wasn't just unnatural. It wasn't the fault of the company. and the leadership and the workforce of the company is still good, considering these points alone. What really stood out to me was the loss from operations and the net loss. The company is losing money. Not only that, they're losing a lot more money through operations. And to visually show you this, um, here, I'm going to show you on this bar graph right here. It's the only red thing that I found on this table. So in March 31st, 2020, the loss from operations used to be, well, this number is in millions, 234 million. And that number dropped drastically, wonderfully, at Q4. And that number all of a sudden almost feels like it exponentially increased, which is very not good. Even though that the vehicle sales have been increasing, vehicle margin have been increasing, all of this has been increasing. This really stood out to me. If this was green, that would have completely changed the story of whether or not if this is a guaranteed solid investment. And no investment is guaranteed, but you want to get closer to guarantee. Their net loss, it was 360 million in the first quarter of 2021, compared with the $77.1 million net loss in the first quarter of 2020, which isn't bad. They've decreased their net loss. And the RMB 107.5 million net income in the fourth quarter of 2020. It seemed like there was no net loss. At all. It was income, net income, having the money coming in, and now it's lost in $360 million in the fourth quarter of 2020, which is really scary. And they kind of try to ease out the losses in their financial statements with this term non-GAAP net loss. And it's seen throughout, and it's honestly kind of confusing. I've never heard of it before, never seen it, but they're trying to hide it. See, over here, 234 million, and if it's decreased 224 million, but then again, this number, it's increased since then. Going back to their financial highlights, although there was, some bad, I don't think it's going to stay like that for long, partly because of how powerful Li One is and the number of deliveries they're getting and how much their vehicle sales are increasing. And it almost seems like the loss from operations are mainly going towards their research, by the way, and that I can prove right here. So in this point right here, the research and development expenses, not a lot of annotations were done in this part because I felt like it was the neutral factor for why the operating expenses were so high. It is 514.5 million RMB in the first quarter of 2021, representing an increase by nearly 200%, 170% from the first quarter of 2020, and an increase from 37.5%. Basically, what this tells me is that the company is willing to invest upon themselves. Actually, they're researching and trying to improve their technologies within the company, and it comes with a cost that's only worthwhile to investors thinking that the company is going to grow. So going back to these financial highlights, I honestly see more green, more good than I do see bad. And that takes me to what they expect in Q2. So for Q2, looking onto their deliveries of vehicles, they predicted for it to be about 14,500, in between 15,500 vehicles, representing an increase of 119.6% to about 134.7% from the second quarter of 2020. Now they're looking at this from an annual long basis, but why I highlighted this in green, they exceeded this expectation, and this bar was kind of set pretty high, pretty low. In fact, I even kept a comment here to include that Li Auto surpassed XPeng for the number of vehicles sold in this quarter alone. And the total revenues, again, also went up due to the more sales and deliveries of vehicles, and they exceeded this expectation as well. Proof to show I got you. So here we could see specifically that for the second quarter of 2021, total deliveries for Chinese-based EV maker Li Auto has jumped 161.1% year over year to reach an all-time high of 17,575 delivered vehicles and surpassed the previously provided guidance by the company, the previous expectation. Wow. And that is with 7,713 Li ones in June 2021 alone. Additionally, as I mentioned earlier, that Li Auto is one-upping XPeng, specifically in June. And this is according to CNBC. Their headline, Chinese electric car startup Li Auto delivers over 1,000 more cars than XPeng in June. And Li Auto, they did 7,713 units. XPeng, 6,565 units. Completely amazing, and the number seems like it's going to change. Li Auto might not be number 3 anymore. Who knows if Li Auto is going to catch up to Tesla or NIO? Because right now it seems like it's about to be surpassing XPeng. That is considering the number of vehicles sold. But then again, more vehicles, more revenue, more sales, more money to invest upon themselves. All right, that concludes my fundamental analysis. I'd like to provide some technical analysis before I drop off the video. So on Friday, it wasn't just Li Auto that took a heavy toll. It seemed to be that NIO and all the other EV stocks took some heavy tolls on Friday. And the reason to me is still pretty unclear what exactly happened, but it did seem that the stocks were trying to bounce back up. They were originally below this SMA 180 line, heavily signifying that the share price is going to decrease, which it did. And when the share price started to go up, a new support level was found right here. And we might see the importance of that support level later on. But it managed its way to come up, cross that SMA 180 line, and we had confirmation here and here twice that it's going to be bouncing up and down, but it's going to be above that SMA 180 line, meaning that the share price is most likely going to go up. Now let's zoom towards this latter end part. We could see here the blue line's the share price. This purple line is the SMA, and here, wait, let me click. Yeah, the SMA, or no, EMA 9, and the green line is the EMA 21. And here we can see the EMA line, it crossed, EMA 9 crossed over the EMA 21, and the share price was just going down. And that's what the MACD, my favorite indicator, also showed that it's been going down. There's no positive slope, it's not going up, and it seems like it's gone below the SMA 180 line. So right now, in terms of short-term and technical analysis, I'm not 100% sure if this is a guaranteed buy to know if the price is going to go up. My best bet would be if the SMA or EMA lines crossed above the SMA 180 line, and you got confirmation with the share price bouncing off that SMA 180 line and it going upward. Now that's for short-term analysis, but with the fundamental analysis I've provided, it seems like in the long run, in the long term, I see Li Auto and maybe the other EV stocks, to be honest, going up. It's the generation, it's the future, and I can see it now. That concludes my video. Once again, I am not a financial advisor, and this video is for entertainment purposes only. If you liked what you got from this video, please consider liking this video. Subscribe to my channel for more fundamental analysis and technical analysis on the most ranging stocks out there. Yeah, thank you so much. Hope all goes well for you, and peace out.